Welcome everyone to tonight's Hookup with Real Estate Masterclass. We have a very exciting call for you this evening with a special guest, Zach Zakas, and I will introduce him to you to him momentarily. If you're watching this replay, if you have questions, you can ding us. But if you're here live, feel free to ask questions during the call. So I wanted to mention that we have two ways to stay connected. Hang on one second. Kind of messed that up. This button here, I'm trying to move the thingy out of the way. We have two ways to stay connected. One is to subscribe to our YouTube channel, which is at youtube.com/the @hookupwithrealestate, all one word. And the second way is through our Facebook group, which is facebook.com/groups/hookupwithrealestate. We'd like to share our mission, which is to provide aspiring and early real estate investors with exceptional education, skills training, and opportunities to invest in profitable real estate while simultaneously sharing ways to avoid costly mistakes like those my husband and I made early on in our real estate journey. And you can read about those in the book that I helped co-write, which is called Real Women in Real Estate. You can get it for $2.99 on Amazon or a signed copy mailed to you for $17. Also want to mention that my husband is a New Jersey realtor, northern New Jersey. So if you're ever looking for a property in this area, please keep it in mind. And I just want to share our calendar. So this is a calendar for events for our monthly Hookup with Real Estate Masterclass. And I do want to mention that we may have to move the August meeting a week early because we're going on a trip and it may coincide with that date. So stay tuned for more information there. Also want to mention that Hookup with Real Estate is powered by Legends Equity Group. The founder of Legends is our mentor. There I am. This was down in Florida at a Grant Cardone Real Estate Summit after event. Okay, Ken, would you mind reading the disclaimer or short form version of it, please?
Surely. Give me 1 second. I have to admit somebody. We appreciate you attending the Hookup with Real Estate Masterclass presented by co-hosts Kenneth and Donna Hook. The content we provide is strictly for educational purposes and not intended as legal, financial, or investment advice. Participation in this program is at your own discretion. Real estate markets are subject to change and can be dynamic. Neither Hookup with Real Estate nor its representatives will be liable for any outcomes resulting from the information provided. Seek professional advice before making any real estate or investment decisions. By attending, you consent to this event being recorded and understand that internet security is not absolute.
Okay, and finally, the quote of the day.
There is always an opportunity in real estate. It's just a matter of finding that opportunity in the current market. Samantha DiBianchi.
Thank you, Ken. All right, now we're getting to the really great part of the meeting, which is our special guest, Zach Zakas. I'd like to introduce him. Zach specializes in industrial investment, sales, and leasing with a focus on transportation, logistics, and industrial outdoor storage properties. He works with the industrial landlords, international corporations, freight carriers, 3PL, which is third-party logistics, shippers, and manufacturers, both in Savannah and throughout the Southeast United States. Zach began his career at State Street Corporation, where he provided investment services for REITs, which are real estate investment trusts, ETFs or exchange traded funds, pensions, and mutual funds. He also spent 2 years as a high school teacher in Chelsea, Massachusetts, after being selected for the Teach for America National Service Corps. Prior to relocating to Savannah, Zach was manager of finance for Teach for America's Massachusetts region. He began as an industrial brokerage since 2022, and this year, 2024, Zach joined Colliers International, a renowned full-service real estate brokerage firm with operations in 67 countries and is traded on the NASDAQ. Finally, Zach is a member of the Savannah Area Realtors Board, SAR, the Realtors Commercial Alliance of Savannah and Hilton Head, RCA, and Zach is also involved with Big Brother, Big Sisters. Please help me welcome Zach. Hello, Zach.
Hey, wow, Donna, thank you. I don't think I have much else to say. It's quite the intro. Thank you very much. Yeah, I met Donna through another friend of mine, John Sidoti, who's also a Boston guy. I gave sort of a similar talk with him, just sort of on industrial investing. He's really big on flex industrial and multi-tenant flex. Sold him a building in Savannah back in December. Donna, I don't know if you really want this super focused on industrial or but
yeah,
I guess I can
a broad understanding of what industrial is, you know.
Okay.
Many things.
Yeah. So me at Colliers, I guess just here in Savannah, we definitely very much focus on industrial. We have some retail brokers as well, multifamily brokers. The most part in commercial, you're typically gonna specialize in a certain asset class, which I kind of just fell into industrial probably a year and a half ago now. So for me, I kind of do everything in terms of I will work on all sides of the transaction, from selling properties and representing the landlord, helping investors identify good purchases and representing them in that transaction. And I also focus pretty heavily on leasing here, which I think a lot of people don't really focus on it as much, or I don't want to say they don't understand, but it's a huge aspect of real estate investing is the leasing of commercial properties. It's probably the most important factor in the value of an asset. And if done properly, it can be super beneficial to your investment. And if not done well, it can have really negative impact on your investment. So leasing is a huge component of real estate investing. And it's something I focus on quite a bit in terms of industrial. In terms of that, kind of like Donna read in my bio, I work with many different types of users. My sort of niche is transportation. I work with a lot of trucking companies, whether it's drayage, which would be moving a container from the port to a yard close by, or the company which would be over the road, would be the company that comes and picks up that container from the yard and brings it from, say, Savannah to Ohio. So I've really found myself specializing in that niche. So I've been lucky enough to work with companies here in Savannah, and then through that, there's a few trucking companies that I represent nationally throughout the United States, which is a lot of fun. And again, on all sides of the transaction. So whether they're looking to lease a property, sell a property that they own, that's owner occupied, could be a sale lease back. So I could have a tenant that currently owns a property, they operate their business there, and maybe they want to free up some capital on their balance sheet. So they'll sell the property to an investor with predetermined agreements to lease it back for a certain period of time so they can still operate their business. It's really, I mean, real estate is very broad. It's a wonderful asset to invest in. And there's so many different ways you can do it. And there's so many different, I think, strategies for raising money. There's so many different strategies for, how long are you going to keep the property? Or, some people want to hold it forever. Some people want to hold it as short as they possibly can and execute their business plan and sell it. So it's a really interesting business to be in. I think industrial is very exciting. I think the industry in itself has evolved a lot over the past probably 10 years, just with the rise of e-commerce. And I think the invention of the shipping container, which was probably not as long ago as everyone realizes, like the 60s, completely changed our entire planet. And so it's still in the relatively early stages. I think that's why there's also a lot of opportunity in terms of investing in the industrial sector and specifically in real estate. Businesses are still figuring out how to be efficient in what's really a relatively new global economy. So it's very, very interesting being in the position that I'm in, which I guess, I don't know how well I explained it, but I'm kind of all over the place. So it's interesting every day. So I can talk about whatever you all want me to, and happy to answer
Yeah.
any questions. And yeah.
So talk a little bit about like the transportation, trucking, and then we'll talk a little bit more broadly about some of the other types of industrial. But so is it mostly yard space, or did they need enclosures for trucks? What are you finding?
So it really depends on who their accounts are and what kind of material they're handling. And there's so many different, even these trucking companies, they all seem to specialize in the transportation of a certain product or commodity or region. And they have to, right? So they have to have some sort of competitive advantage. If all they had to offer was, hey, we have a truck and we can move your goods from here to there, well, so can't everyone else. So I think you find that these trucking companies will really specialize in doing one thing, moving one sort of product. And then there's even like if you would call it out of gauge trucking. So that would be like you need windmills shipped, and they come on a ship, and you can only fit 2 on a flatbed, and they have to go from Savannah to Kentucky. And so there's companies that specialize in just that sort of stuff, really odd shaped, large items. You'll have other companies that are just running very, very lean and competing on price. Usually that's like moving Amazon product, stuff like that, stuff that's coming from China. It's very interesting. I really knew nothing about it when I got into this, and it's become a complete fascination of mine. Maybe I shouldn't admit it, but maybe even more so than real estate is just the transportation industry in itself in the United States is it's super interesting, and it's evolving very, very, very quickly. There's a lot to unpack there. But yeah, in terms of the real estate side of things, industrial outdoor storage, which is kind of I guess a new term, iOS. So I hear the joke often that you say that people think you're talking about an iPhone. No, it's industrial outdoor storage. That's the moniker that I guess was given to it. It became like a very cool thing, I think, to invest in a couple of years ago during COVID, especially here in Savannah. There was a backlog of containers, and ocean carriers were way out at sea waiting a long time. I think could even be up to like over a month just to get into the port. And so investors saw that as an opportunity that, is a very fragmented industry, meaning that there were lots of different owners of industrial properties. Where if you look at an asset class like multifamily, Class A, like that's fragmented too. But if you look at like Class A multifamily, it's there's not that many different owners. You look at the same cities, the cities' beautiful complexes, a lot of times they're the same, groups, the same firms that are building these or buying them. Industrial is very, very fragmented, which creates some opportunity. You have, a lot of properties that have, been in a family for a long time. They're not institutionally owned. Maybe they haven't been, maintained properly. I don't know if properly is the right term, but maybe they haven't extracted all the value out of the property that they could, because maybe they didn't need to. Maybe they were running their business out of it and their business was very profitable, and they weren't concerned about expanding the back 2 acres of their property to get more cash flow. They didn't need it. So there's a lot of untapped opportunity in industrial, and especially in outdoor storage properties. So things
So
like
when you
truck
say
terminal.
outdoor storage though, is it a piece of land that they're
Yeah,
sitting?
yeah, it's very interesting, but it's more, it seems so simple, but it's much more complicated than it looks. But yeah, your typical outdoor storage facility would be, it looks like a parking lot. It looks like a parking lot with a fence and some lights, and it's zoned industrial, which is the most important factor in most municipalities. In order to have a semi truck or a container on chassis parked, it's going to be zoned light industrial. You can't just park your truck in a McDonald's parking lot or in a commercially zoned property. It usually has to be light industrial. And cities are very reluctant to rezone properties to light industrial, because the city would make much more money if they could build, say, a 15-story apartment complex and get taxes from that, versus letting someone just build a truck yard. It's not going to, just that, and then the whole country, being very focused on the environment and that sort of thing. So there's less and less of it. It's fragmented. It's literally like when they said that they're not making it anymore. They're not making industrial land close to port cities in the
Yeah,
United
where
States
Ken and
anymore.
I used to rent before, well, I guess we were married there, but before we got married, I would say. It was a duplex, and then behind was a fence, and then slowly our landlord started bringing trucks there, like 18-wheeler trucks. And now there's, when that started, we said, oh, it's time to move. But I think there must be about 100 18-wheelers back there now. So I guess that's
That's
what you
interesting.
consider industrial outdoor storage.
Yeah, and so with saying that, it's not always trucking companies. So, you'll have stuff like, I did a transaction with an electrical contractor that was hired by Georgia Power to install light posts on the islands near Savannah for the next 2 years, and they needed 5 acres of land that was fenced and lit that they could put light poles down. So that's a perfect example of industrial outdoor storage use that's completely unrelated to trucking. Well, I guess not really. A truck's got to drop the poles off, but it's just that was a contractor that needed it. And really, those uses, I think, are preferred because it's lighter. If someone's going to be storing stuff on a property for longer periods of time and it's just sitting there and it's really just storage space, versus trucks coming in and out and in and out, and or forklifts, it's a much lighter use. So landlords actually prefer to have more of a storage use for these outdoor storage properties, more so than having trucks in there all the time.
All right, so let's talk about some of the other types of industrial properties.
Yeah.
We can talk about
I think,
flex a little bit.
yeah. Flex, I think there's a lot of definitions of flex. Same with that. I hear shallow bay or small bay, and whenever people call me in Savannah, ask about shallow bay, I always ask, what's your definition of shallow bay? Because in Savannah for a while, that was like, that could be a 10,000 square foot building with 5 2,000 square foot spaces. But in Baltimore that might be like 100,000 square foot building with 20,000 square foot individual spaces. So that term can really vary. I think flex properties have also, obviously, they've become very popular to invest in. I have a couple for lease here in Savannah, and so tenants you'll see in those all kinds of different uses, from flooring companies to plumbing contractors to laboratories, just some really interesting businesses. Depending on I guess the quality of the property, you can get some really good credit tenants in properties that are, maybe you're able to acquire them at lower prices, not priced by the foot, but lower than saying acquiring a million square foot warehouse to land Amazon as your tenant. You can buy a really nice Class A multi-tenant flex building and get some really good tenants in there that have quality credit, which is it's pretty interesting that when you put these things up for lease, some of these tenants you don't expect to call you, and then they need 5,000 square feet or 7,000 square feet for a specific use that they have. But it's becoming very popular. In addition to that, I guess I would consider a niche in itself is these larger warehouses that I know, at least in Savannah, about 20 million square feet was built over the past year. I think pretty much every major industrial developer for the past couple of years has been trying to get here and kind of build their trophy asset near the port. There hasn't been a whole lot of trading. I think that'll take a couple of years. Most of them are trying to still lease them up. But there's so many different sectors. And on top of that, there's manufacturing, which would be very different than these bulk warehouses, which are really for transloading and shipping and logistics. You're going to have I had a client or the client that I'm working with right now, and they need 300,000 square feet to manufacture solar panels. So it's just, and there's a lot of different opportunity, but typically, whether you're investing or brokering, you tend to specialize in something very, very specific. So even in industrial, like, that's not specific enough. Most brokers will, not only are they industrial broker, but they really specialize in site selection for manufacturing companies, or they really specialize in landlord representation on single tenant net lease dispositions. It's usually it's very, very specific. And I think in my career, I'm at a point where I'm still leaning a couple ways. I've definitely ventured into industrial 100%, but I think it takes a while as a broker to really, I've only been doing this for a few years, so how can I really say I'm a complete expert in a certain subject matter? But I would say that most do. And so even then, most of my clients, I guess what I have been specializing in terms of investing are mostly looking for smaller single tenant industrial buildings with, usually their criteria would be like, hey, we're hoping they have below market rent. Maybe the lease is turning within a year or two. Maybe the building needs some work. Maybe the tenant isn't that credit. They're hoping to acquire the building, put some money into the building, perhaps get a new tenant, or, I guess it's not God's work, right? Like, they're buying these and trying to raise the rents and improve the property, improve the asset, and typically the game plan is to sell it at the end. And I've kind of built a business finding those kinds of opportunities and those deals for outside investors. from New York to Boston to California to Canada. So it's been really interesting. Savannah is like super in demand, which I didn't even know when I moved here and got into this and learned a lot. So it's
So for someone
very,
trying to find a property like this, an industrial property, what would you recommend? Using a broker or?
yeah.
What?
I think in terms of it's really weird. Like I had a lot to learn when I got into this. So in terms of brokerage, typically with these investors, like they're not going to use a single broker. Like none of my I'll call them clients. Like they don't only use me. Like they're calling the guy at the desk next to mine too, like for a deal. Like there's really no exclusivity on like the buy side. Most deals are off market to begin with. There's not like a really good deal doesn't need to be put on the internet. Like if I had a seller with a good value add property with a decent tenant and the seller had realistic expectations, like he understood the market, he knew what his property was worth. Like I could sell that, I could put that building under contract in like an hour and a half. Like these groups are ready to go. They can close all cash. It's pretty exciting, but you have to be careful too. So it's it's interesting. It's kind of like I'm trying to find like an analogy. I don't know if there is one, but yeah, I would say yeah, if you're looking for your own deal, yeah, reach out to brokers. Tell them your criteria, what kind of property you're looking for. Usually they'll like I think the main thing is most brokers don't want to waste their time. So if you're calling them and you're like, oh, I'm looking for this, and um, like they'll probably quiz you on the market that you're calling them about and kind of qualify you, see if you really understand like what buildings are trading for, like what's your capital source, what kind of funding do you have, are you syndicating or do you have an open fund? Like all those things matter because for a broker, like we only get paid if we close a transaction, right? So we're going to send the deal to the person that we think is going to buy the property and close. So I think a lot of these outside investors, like they work really hard on just building relationships with brokers. I think usually too, if you're able to find someone a good deal, hopefully on the back end they'll let you lease the property for them. I mean that only can continue as long as you keep doing a good job. So that's another, I guess, source of revenue for the brokers. But yeah, I'd say if you're looking for deals, network with brokers in whatever market you're in. It's a small world too. Like I know a lot of brokers in California and Mobile, Alabama, and Jacksonville and Orlando who also work with a lot of the same groups that I work with. It can be fun. So I would say that, and then I mean you can make your own calls. I mean, a lot of groups are, especially the larger ones, are hiring like 5, 6, 7, 10 people just to sit there and call people, call building owners, paying them salaries, figure out if they want to sell. So there's a lot of competition. It's not easy. If it was as easy as just picking up the phone once, calling a broker, and hoping he's going to send you a great deal to buy, like on the first call, like I think your chances of that are like zero, like actually zero. Typically, a broker is going to send a deal to someone first or second or third that they've done a deal with in the past, or that they've seen, successfully complete a transaction. Because the last thing we want to, especially if you're in a small market like Savannah, if we send a deal to the wrong buyer, we don't know them, we don't know how they operate, and the seller is trusting us to facilitate the transaction, and it goes very bad with a buyer that we brought. It's very bad for our reputation and for our business. So I think if you want to find deals, build relationships. It's very important. So
Yeah, that's sound advice. Now, what kind of, like, is the risk capital to put up for buying one of these properties similar to a multifamily, or, you still have to do your due diligence and you still need attorneys and you still need
Yeah,
some syndication fees maybe?
yeah, I think most of these groups are charging like an acquisition fee to their LPs. I think it's all the same pretty much. Yeah, you gotta have to do a phase one, especially on an industrial property, likely a phase two. I think especially in industrial, the due diligence can be quite long, and so you'll often have contracts that have extensions written into them, perhaps with money going hard for a certain extension. But it's case by case, I think. But it's pretty standard. It's not much different. Yeah.
Yeah. Have you seen any real mistakes that people have made trying to buy these properties without, let's say, not building effective relationships or not being able to close anything beyond those two?
Yeah, I think when the market was really hot, when interest rates were low, eh, I think there were a lot of deals that, I mean, we saw it in multifamily, like people were raising money for multifamily and buying god awful deals. And they were LPs putting in money that unfortunately were, they lost a lot of money. There were a lot of bad deals that traded over the past couple of years. We saw the same thing happen in industrial. I think a lot of people were making assumptions on their acquisition based on leases that might have been sort of inflated. And I think that's something for me as a broker. I'm always very, very honest with these groups that are buying, at least here in Savannah, because I really do understand this market. I think comps are super valuable. Like real estate is so weird. You can't just go and like, it's not like the stock market where you can just go and look at what the Apple stock is trading for today. Like comps are the most valuable like information you can have, and the more you have, the better. I think as brokers, like here at Colliers, that's our bread and butter. Like, why do you hire us? Why do you work with us? Why do you want us to lease your building? Or it's because we have really good comps and our data is it's valuable. I mean, it's super valuable. I don't even know if people even realize how valuable the data that some of the larger brokerage firms have. The transaction data that we have is absolutely incredible. I mean, we hire people, we pay people to constantly monitor it and keep it up to date. We have people that literally just call other brokers, call owners, asking, "Oh, hey, I heard you just leased that. What did it lease for? What were the operating expenses? What were the terms of the deal?" So on the flip side of that, if you call a broker and they send you a deal and they're telling you, "Yeah, this will definitely rent out for $13 a foot. Like here's two comps." And then they send you the deal and they say, "Oh, it pencils in. That's an 8 cap. Wow, that's great." Like, well, he didn't send you the 37 other comps that he could have that said it was $4.50 a foot on all these other similar buildings. And we see that all the time, all the time. And so that's really interesting. And that's something as a broker, I pride myself on is I'll have a group call me that I didn't send them the deal. They'll call me and say, "Hey, we're underwriting this property. Can't tell you where it is, but this is it's 20,000 square feet and it's on this amount of land, kind of in this area. They told us it's could easily get $10 a foot." And I'm like, "Don't buy that deal. It's horrible." And I've had people get like, sometimes they don't want to hear that, right? They want to buy the deal. They want to charge the fee. They want to raise the money. And like, I think a lot of funds they're fee based, right? So like it can be a difficult conversation to have as a broker, telling, someone's coming to you for advice and you tell them, "No, it's not a good one. It's bad." It's not always a positive conversation to have someone. So that's something to look out for. Is the broker that you're working with giving you a holistic view of the market to support the underwriting of the deal, or are they sending you a select few comps that might be artificial or inflated, or there might be more to the story of that lease or the sale than you're realizing? Was it a true arm's length sale, or was the building sold with the purchase of the entire company? Things like that you need to look into and be careful of.
Yeah, that's interesting. Thank you for sharing that. Speaking of leases, I know that industrial has some unique type of leases. You want to talk about triple net, double net, single net, absolute, those kind of leases?
Yeah. I think sometimes I gotta like figure out what they all mean. I think they change a lot. A lot of people have different opinions of what it means. And it's really not even. It's really broad. It's like triple net, double net, modified gross. They're all words that get thrown around in the negotiation stage of a deal for a lease. But when the lease comes out, it's not like triple net. Like it spells out what the tenant's paying and what they're not paying. Like very specifically in the lease. But triple net normally means the tenant's on the hook for pretty much everything other than the roof, the structural components of the building. That's pretty much it.
Yeah, major repairs. Right?
Meaning they have to pay all the property taxes, the property insurance, normal maintenance and repair. They have to keep up with the landscaping. If the toilet is broken, they have to bring a plumber in to fix it. If the lights go out, they need to buy new light bulbs and put them in. If there's interior electrical that's bad, they need to fix it. It's really on the tenant. Now, if there's usually it's like, if there's the plumbing to the street, that would be on the landlord, like the main line. But then absolute triple net would literally be, and you don't really see those that often, but that's everything. Where you will see those, I think, and I'm not really in that space, but I think on a lot of the single tenant triple net, like Wendy's, Arby's, Taco Bell, you'll see absolute triple net. So if the roof collapses, that's on the tenant. They're paying that bill. And that, again, that's not really my space, but I have seen deals more. When I've looked at deals like that, that's when I've seen the absolute triple net leases. Double net, it could mean a lot of things. It depends on how the landlord wants to operate, but maybe the landlord's going to pay the taxes. So the tenant's only going to pay property insurance and maintenance. And it can be a combination of any of those kind of three categories. It's usually the property insurance, property taxes, and maintenance. Then utilities are typically on the tenant. Sometimes in multi-tenant buildings, you'll have a modified gross lease, and then the utilities, if they're not separately metered, that can be really tricky. But ideally, tenants paying for everything except for the roof and the exterior walls of the building. I think is there anything else? I don't know if I'm forgetting anything there, but
Does anyone have any questions on lease types?
Yeah, I do. In regards to that, I mean, if they're paying like the triple net, I mean, is the price more reasonable because the tenant is paying all that? Is it, relevant, in that aspect?
I mean, no, because I would say most of the leases are triple net. You know what I mean? Like here in Savannah, yeah, it's not going to really make a difference. No, I wouldn't say. If you found a landlord that wasn't like having leases signed that were triple net, like a kind of funny brokerage, like landlord should have hired a broker. I wouldn't lease a building that wasn't triple net. There's no reason to. So no, I wouldn't say you're not going to get a better deal. It might look like a better deal But if you're looking at like a full service lease that includes everything, well, they're factoring the taxes, property insurance are into the base rent number anyways. So oftentimes it really is triple net. You're just not, you're not realizing it, I guess. If that makes sense.
Yes, absolutely.
Yeah.
Anyone else have questions about leases?
Yeah, can you explain what is a modified gross lease? What is that? What does that have to do with the gross? Is that like it's
Yeah, so
sounds
so gross and I think gross and full service are pretty similar. Modified gross, modified gross could also be the same thing as like a double net. Like I said, it's all kind of interchangeable. But like modified gross, for example, can be the tenant. Yeah, maybe the landlord is paying the property taxes, the landlord's going to pay the insurance, and the tenant's going to pay all the maintenance expenses. That could be an example of modified gross. A gross, like a full gross lease, would be the tenant's just paying base rent. What's the rent? It's $2,500 a month. Okay, great. And it doesn't change. There's no operating expenses. The landlord's paying everything. Those are, I haven't had a lease that I've reviewed, and I've never seen one. I've never seen a gross lease. So that's how kind of uncommon it is, at least in industrial. You're going to find gross leases with kind of your mom and pop landlords that don't have the back end support to be like processing all this. Maybe they don't have an accountant that's like billing all these different tenants and remitting taxes, and they're like, oh, I'm just going to pay the taxes myself and I'm going to charge the tenant this. That's usually when you'll find a gross lease or a modified gross lease. It's usually a non-institutional landlord. I've not once ever seen an institutional landlord not have like a triple net lease on a industrial property, at least. On office properties, you'll have what's called full service. It's usually they'll have what's a base year. So the landlord will usually pay the property taxes and insurance, the whole thing for the first year in the lease. And then say if it's a 10-year lease, well, next year the property taxes go up, the insurance goes up. Well, the landlord's going to pay what they paid in that first year, and the tenant's going to pay the difference. And so in year 10, the taxes might be much, much higher than year 1, but the landlord is, say the base year was 2010, and the landlord's still going to be paying whatever those taxes were in 2010. The tenant would be paying the rest. That's more common in like larger office spaces, that sort of thing.
okay. It gives the landlord an opportunity to lock in the rate on the property insurance. Or taxes.
Exactly. And all this stuff, like the different lease types, like that is super important. That is how investors and landlords like increase the value of a property. Like asset management is maybe the most important thing. Like you got to find a good deal or a deal that's stabilized and makes sense. But it's how you manage the property and like oversee it for however many years that you hold on to it. It's so important. So I mean, we're operating on thin margins, right? So these small details, like even on a lot of these leases, you'll see annual increases. And I think before, like people were, 2%, 2.4, 2.5%. We're seeing landlords come at like 5%. Inflation's up. So you'll see, the base year in year 1 is $18, and year 2 it's 19. And on a 10-year lease or whatever, if it keeps going up 3.5%, 4% every year, it makes a big difference. Versus again on some of these smaller buildings with maybe mom and pop tenants, they're not doing that. Like someone locks in at $10 a foot in 2014 and they're still paying $10 a foot in 2024. That's a big problem. But it's also an opportunity for a buyer to recognize a property that, you know, if acquired and improved, you know, could probably get a lot more rent than it's currently getting. So.
So that's what I was going to ask you actually about the price increases built into some of these leases. I know one of John's properties, it's that way.
Yeah,
Yeah.
it's, go ahead.
Yeah, now if you can answer this, and there's another question after from Daggy.
Yeah, I think the sometimes you'll hear it called bumps. People ask what are the, you know, what are the annual bumps, annual increases, escalations. It's all the same thing. It's like what percent increase is there going to be in the rent, and that's, I mean, think of the like last like 10 transactions I did over this month from maybe December to now. I haven't seen a single lease that didn't have annual increases in it. So it's usually not negotiable much more than like half a point from right now in Savannah. At least we're seeing like 3.5%, 4%, is like pretty standard. And it really is basically to protect the landlord against inflation.
Yeah,
So,
because taxes and insurance are going sky high too, right?
yeah.
Yeah.
Right. So yeah, that's pretty standard. Yeah.
We have one more question. Daggy, do you want to ask your question?
Yes. Can you hear me?
Yes.
Yeah.
Okay, awesome. Thank you, Zach. Thanks so much for this presentation. The industrial real estate is pretty much new to me. So I think my question to you is two questions. The first one is, I guess, what advice do you have for buyers when it comes to financing? Because I know if you are considering, let's say, I think someone asked a similar question, like with multifamily, they will consider the return on investment or also count the rent price, right? Like when they calculate your financing. So I guess what advice do you have for a beginner who's interested in investing in industrial real estate? And the second one is for agents who are interested in getting to this sector. How do you find these deals?
So on the financing side, yeah, usually it's going to be based off what the income is in the property currently. So what the rents are, I guess, yeah, it's, there's a lot of different creative ways, but I would say like if you're looking at a multifamily deal, like you're going to want to work with, probably a debt shop that, you know, does 50 multifamily deals a month. Like you want to partner with a debt group that understands the asset, the area, the market. That's super important. I know like nationwide right now on offices, no one wants to lend on offices because it's down in a lot of the major cities. So banks don't want to give money. And we have, it's crazy in Savannah, I think probably one of the hottest office markets in the whole country. The vacancy rate is 2%. And people still don't want to lend. They don't want to lend on an office deal. So that's been really interesting. But yeah, I would say if you're new to investing, like it's really helpful to have a GP that does have a track record, at least for your first couple deals. Even me, like I'm finding these deals and sending these people deals and up close some big ones, but I don't even know that I have the experience yet to like operate a large multi-million-dollar asset and see it through to the end. Like that's something I would want to do with a group or a person or partner that has done it a bunch of times before I put a large chunk of my own GP money into a deal or try to do a deal by myself. I'd certainly try to partner with someone that's done it. So I think there's probably things that I don't get to witness or see as a broker on the principal side that I think it's a skill, right? Like you're running you can look at a property like a business. Buying a property is kind of similar to a startup. There's a lot of risk. You gotta work with people that have experience for sure. On the agent side, I don't know. I was kind of self-taught. I just like internet, YouTube. I think it, in terms of investing and finding a good deal, it's not super like, I think the mathematics, the fundamentals of a real estate investment, it's all pretty much the same no matter the asset class. I don't know if was your question directed towards like industrial or more towards into commercial, or I guess if you could elaborate a little more. Yeah.
Yeah, it's industrial because I think when I'm pretty new to the agent side too. So when I was
Okay.
navigating to MLS, I just haven't seen all this distribution side, manufacturing side, these, big lands and places that you mentioned earlier. I guess how do you go about finding these deals? That's what my question.
Yeah, so to answer that, like I don't even have the MLS. Like I don't even have a login. I've never been on it. It's not something I need for my job, and you definitely won't find like a good deal like that on the MLS. Like the MLS is for residential realtors. I would say like if you're looking for a deal, you're not going to find it for the most part like on the market. It's going to be like you found it yourself, and you like built a relationship with the owner and underwrote the deal yourself. But like in terms of like just if I could just go on the internet and find a deal and buy it and or raise money and buy it, it's like I'd be a billionaire by now. It's very difficult to do. It's yeah, I hope that makes a little bit of sense, but I would say like just through networking, calling, yeah, I, I hope that's somewhat helpful. County records, build your own databases, but you're not gonna find, yeah, in terms of like larger stuff. I mean, you're like on a 1 million square foot building, you're not going to sell that anyways. Like it doesn't matter how nice you are or smart you, like you have to like work on a capital markets team in New York City and work on a team with 7 other people. Like the seller of that property, like the JP Morgan's not going to hire you because you called them and asked to sell their 1 million square foot bulk warehouse. It just unfortunately just doesn't work like that. This is like that would be institutional level. Just people. It's very, very different. These smaller deals, like if you're looking for a 20,000 square foot building, yeah, that's something that you could just call on and maybe negotiate a deal between a buyer and a seller. But on something that's like over, $20 million, you're probably going to have to work on a team of people that specialize in the disposition of that exact kind of product type over and over and over again. So, yeah.
Sounds like you should specialize in a product type too, in industrial. That's what you were saying earlier. Right?
Yeah.
So figure out
Thank
what you
you.
want to specialize in. So in terms of capital raising, are you seeing syndications, syndicators coming and buying these properties? Are you seeing all cash buyers?
Yeah, there's a lot of it going on. Especially with I think there's like these new apps and stuff too, right? Like there's like Realty Mogul and stuff like that. I think it's becoming a lot more mainstream, I would say, but the model's not new. The model's been around forever. And it's across all industries. It's hard work, right? Like raising money is very difficult, especially in an environment when interest rates are not great. But yeah, I would say on the smaller deals, they are going to be syndicated because the larger firms, like if it's a true fund, if it's a real fund, they're not buying like a $2 million deal. It's not worth their time. Like they're looking for a $50 million deal. So that might be a stretch, but on a smaller, say $1 million deal, 1.5, 2, 3, like, yeah, those are often going to be syndicated just because of like a larger fund. That's not what they're looking for. That's not their business model. So,
and are there any lessons learned that you could share, for people who want to syndicate?
are you saying people that want to like start their own?
I mean to buy a property through
yeah.
syndication or buy industrial.
Yeah, I think like if you're the GP, right? Like I guess when you're buying that property and reaching out to people and raising money and just understand that like it could go very, very wrong and you lose a lot of money for these people and you might have to look them in the eye in a year and apologize for losing $100,000. So yeah, if you're thinking about raising money and syndicating and buying properties and the whole thing, definitely make sure that you know what you're doing and that you have your LP's best interest in mind and you're not just trying to charge fees and keep your lights on, I guess. So.
Yeah, no, that's sound advice. We know people that have lost money in this market, so it's tough. I know we're getting close to Zach has to leave a little bit earlier than our normal master class. So I just want to wrap it up and see if there's any questions that others have. Let's see who's here participating still. So Ken, any other questions?
Yeah, do you actually participate in any of these deals, or are you just strictly a broker?
That's a tough one. I haven't yet. Sometimes it can be a tricky situation. Like if I'm a broker, for the most part, I really want to be maximizing the value for the seller, right? Like I want to get the seller the most money they can. Even though oftentimes these buyers, like even if you might call them a client, right? Like usually the exclusivity is with the seller. Like I owe a duty to the seller to, get them the best I can. So it's almost like, okay, if I'm convincing this person to sell their property, and it's such a good deal that I want to buy it as a GP, like, is it always ethical? So that's something I've thought about in my own market. I know a lot of brokers tend to shy away from buying into deals in their own market, especially on the flip side too. If you build a reputation as a broker that buys deals, you start sending deals to investors. Well, they're going to ask, well, why are you sending me the deal? Why don't you buy it yourself? This is a bad deal. That's why you send it to me. So I think being a broker is like, it can be difficult to navigate at times. And there are, of course, a lot of brokers will invest, or you'll hear like rolling their fees. So they'll put their commission into the deal. So yeah, I haven't yet. No, putting my money in my IRA in the stock market, and I'm pretty old school, and yeah, yeah,
well, maybe down the road.
yeah. I've talked about it with John. He's had some pretty good deals. So
Yeah,
even the
does.
one I sold him, I like that one a lot. So, but yeah, no, not yet. I have some other markets that I like a lot that I've looked into, like co-GPing. But I don't know if I would do it in Savannah just because I am a broker here. So,
Yeah.
Seems
yeah.
like conflict of
Fiduciary
interest.
responsibility to your clients, right?
Yeah.
Because I'm a licensed realtor in New Jersey too. So
Yeah.
yeah.
Even me, like I'm an industrial broker, but like I'm still very interested in like residential investing. Like I have some friends that do very, very well, just on the residential side. And that makes a lot of sense to me too, especially if I can just use like most of my own money, if I don't have to go out and raise it all and do it myself, if my main thing was going to be brokerage. Because if I start doing deals myself, well, then how much effort am I really putting into being a broker? So I think to be a really successful broker, it has to be your number one priority. If you start acquiring a bunch of properties, well, then you might be 50-50. So it really depends on, I guess, what your motivations and goals are. And right now, my motivation is being the best broker I can. So
That's awesome. And if,
Thank
do you
you.
want to put in the chat how people can find you
yeah, sure.
while you're
Put
doing
my
that? I'll see if there's
phone
any
number.
other questions. Karen, do you have any other questions? I don't know if she's still here. Daggy, if you wouldn't mind putting your contact information in the chat, I can keep you posted of these future calls. Marissa, any questions?
No, I just wanted to say thank you. Zach, my daughter started with Teach for America years ago. She jumped
Oh,
into
that's awesome.
finance. Yeah, she has
Okay,
an agency, so she's a financial advisor. So we're
that's
having a
so
lot of fun.
awesome. All
Yeah.
right. Yeah, I was Boston 2017, so it was amazing.
You still have your licenses.
I think it's still active, yeah, technically
Yeah.
in Massachusetts. Yeah, I thought about teaching when I moved here. It just I don't know. It's a lot of work. Like that's people always ask me with my experience teaching, like they should be paid 5 times as much as they are. So
Well, that's why she's loving what she's doing, because she's just,
yeah.
she's teaching people how to manage their money. I met your securities licenses.
Oh, no. So at State Street, I was actually like in I wouldn't call it like a fiduciary role. It's more like
Okay.
operations, and yeah, I didn't need it. Yeah.
Yeah. Well, thank you
Um,
again so much.
yeah, no problem.
We'll
No
connect.
problem. Yeah.
Appreciate your
Yeah.
time.
Yeah.
Thank you all for joining. Any last questions from anyone? Nope. Okay. Well, Zach, we so appreciate your time. Thank you so much. I will send out the recording as soon as possible to you. It'll be on our YouTube channel at youtube.com/@hookup-with-real-estate. I'll let you all know when that happens. So, any last thing you
Awesome.
want to wrap up with?
No, thank you all. It was super interesting, and glad I got to meet a friend of John. And sounds like you all, I think, have maybe done deals together too. I talked to John earlier today. So yeah, this has been a lot of fun. So, and I learn a little bit from you all as well. So it's very interesting. But yeah, I appreciate it. This was wonderful.
All right. Well,
Thanks
thank
for
you
being
all.
here.
I'm going to stop the recording.